Hey all, welcome to ShareTreck. Today is the 7th of April 2022. The markets were looking great when I saw it in the morning, but we don't know what's happening right now. So we'll come to that when we do our technical analysis of the genomic shares. But right now I have a few news articles to share in the first part of this video, and also geopolitical news that might impact the markets today. And the second part is going to be talking about NASDAQ, VIX, gold, and Bitcoin, just to get an overall idea of where the market is at today. And then finally, after market open, we'll be looking at the genomic shares to gauge their price action, potential price action today. So let's get started. So let's start off with the first headline, that is Feds to reduce assets of almost 95 billion per month starting. So it's happening, folks. And I have a graph for you below, which shows how the Fed is going to come to this figure of 95 billion per month. It's a little bit tentative right now how they're going to do this, but here are some of the observations that I have. Officials generally agreed that a maximum of 60 billion in treasuries and 35 billion in mortgage-backed securities (MBS) would be allowed to roll off, phased in over 3 months and likely starting in May. That total would be about double the rate of the last efforts from 2017 to 2019 and represent a part of historic switch from ultra easy money policy. So 35 billion in mortgage-backed securities. So if you look at the graphic I have here, the fine print at the bottom says that the Fed can also sell mortgage-backed securities off its balance sheet. So that option is also there, apart from the runoff. In the last cycle, it took a full year for the Fed to reach its maximum reduction rate of 50 billion a month. That was the target last time. It started with 10 billion a month with a combination of 6 billion in treasuries and 4 billion in mortgage-backed securities, and slowly increased by 10 billion a quarter until reached its maximum rate in the fall of 2018. So this time what's going to happen is it's potentially going to go from 0 to 95 billion in a space of 3 months or much longer if the market warrants. And not too much longer, just a little bit. So in the 3 months, if they're not able to ramp up and if the market starts showing a tantrum, they may have to slow down a little bit. But the intention is that by May, they will be in a position to reduce their balance sheet by 95 billion a month. So most probably in our next FOMC meeting, which is likely to be in May 3rd to 4th, we'll get a much clearer picture of where the Fed is at with regard to meeting the target of 95 billion per month. So this is a big deal, and this happens to be our first news article today. And if you recollect, in my previous video, I was talking about a recession. And one thing I mentioned is the housing market situation in the US, how precarious it is. So already mortgage applications have dropped, and there's a lot of inventory in the West Coast, and in the East Coast there is a shortage of inventory. So there is imbalance out there, and also given the fact that there is so much of pressure on the monthly expenditure from the wallet of the common man, if this MBS reduction from the balance sheet takes steam, then it's going to push the interest rates upwards, and it's going to cause tremendous risk in the housing market, in my opinion. I may be wrong, but the Fed always has got much more information and much more qualified professionals to make that judgment. But in my personal opinion, based on what I know, I think this is going to push the housing market in the next 6 months into some kind of a funk. I don't know if it's going to be a crash, but definitely there's going to be pain felt in the housing market going forward as this MBS unwinding starts. And that in turn is going to feed into reduced ability of the consumer to support the market, which means many companies will have to drop their prices, and there will be reduction in margin, there will be a bit of unemployment, all those things might follow. So that's what I think might happen. We'll have to wait and see what happens. So having said that, I would like to go on to my next news item, which is a good news item as such, because this shows that the market participants do not think that the IP battle is something that they need to worry about too much. And the article basically shows that the CVC group has been able to sell CRISPR IP to another organization, despite the fact that they are appealing in the court. So overall, I think I stand by what I mentioned in my earlier video about the CRISPR IP. The lawyers will keep on doing the battle necessary to come to a resolution in the courts. And once the courts decides either way, the Broad Institute has already indicated that they would like a compromise and share the IP. So CVC will be able to still get a good deal with Broad Institute. And as long as they stay with the academic institution, it's going to be good for everyone because the cost to market and everything is going to be much more subdued as compared to if it were to go to somebody like Toolgen or Sigma. So let's wait and see what happens. But right now it looks good. It seems that industry is just putting its heads down and working away at coming up with better therapies and products. So with that, let's look at the geopolitical situation. So the first headline I have here with the Russia-Ukraine war is that the veterans are preparing to battle in occupied Luhansk. Reading further into that article, it seems that Russia is deploying more of its forces from northern to eastern Ukraine. The objective is to step up the battle in the Luhansk and Donetsk region, parts of which were already controlled by Russian-backed separatists. Russia will take advantage of its shorter supply lines, something which proved a problem in its failed offensive on the capital Kyiv. And also Russia is now desperate to have some victories because the image of being a global superpower is kind of tarnished a little bit because Ukraine was able to hold them back. So this could be a winning strategy for Russia. So they are continuing to dig in and they are continuing to fight. And this doesn't seem to have much of a resolution. And I also like this particular article that I have seen in CNBC. The thing I like about CNBC is that they have very, very clear bullet points at the beginning of every article that kind of drills down the essence, so you don't have to waste too much of time. So what this article says that it will be difficult to resolve Ukraine war diplomatically unless the situation on the ground changes, according to Francis Fukuyama of Stanford University. Both of the sides have lost so much that the kind of concession that would be needed to come to a compromise solution are just not politically acceptable. He also said that he's more optimistic about Ukraine's odds of winning the war because morale is higher. And as you would note that there's always been reports of Russia using conscripts, which are young people who are less trained and they have been forced into military work. So compared to that, the Ukrainian soldiers, they are all motivated and they are voluntarily coming in to fight to defend their motherland. And many of them have come from abroad, leaving a cushy life and come to fight in the trenches. So even if they are less trained, the motivation is very high to get things done. So they are likely to prevail. That's the sentiment that's shown in this particular article. Only time will tell what's going to happen. So having said that, as long as the Ukraine-Russia war is going on, there is going to be a lot of risk around. Oil price, when I saw in the morning, was still going down thanks to the initiatives of releasing oil from the strategic reserve, as well as the activities going on to get the Iranian oil into the market, as well as OPEC making positive noises. So let us see where it goes. Another factor that we should remember is the fact that Shanghai lockdown has been extended. That has dampened the requirement for oil. But I bet that as soon as Shanghai reopens, there's going to be a jump in oil prices. So having said that, let's go and have a look at the NASDAQ and the other indicators and see what it's showing us. So here we have Bitcoin. This we're going to start today. It's around 9:39 a.m. in the morning, almost 9:40. Bitcoin is not doing very well. And looking at the MACD and the momentum, it seems to me that we are likely to break down below the support line of 32,208, which is this green line, which is also supported by the 50-day exponential moving average. So there is very strong support out there. But the MACD and the momentum indicate otherwise. So we're going to break down below that. And then we have this diagonal line of support, which is available for us. And the next level of support is 41,356, which is the second green line, horizontal green line. So that's what Bitcoin is saying. So it's showing a bearish tendency today. If you look at gold, gold is again still consolidating. And if I was to draw a line, trend line out here, then it would seem that we have some kind of a support out here at this level. and we have not gone below it. And we also have this diagonal line which had drawn earlier, linking the lower highs. We might probably break through that and come on the upper side because we are on an upward price trajectory, and this is a bullish pennant. So I'm looking forward to it breaking upward. Let us see how it proceeds, because in the MACD, even though it is bearish, it is tending towards a signal line, and momentum is slightly above average and pointed up. So there's a good chance that gold might go up today. Now let us look at what we have here with regard to US oil, which is the next stop we take. And oil has fallen down below the bullish support line, which is a good news for everyone. And the next support is going to be the 100-day exponential moving average. So now we have an additional resistance here from the 50-day exponential moving average. MACD is bearish and moving away from the signal line. Momentum is below average and flat. So both of that indicate that oil is going to stay in the red today, at least for the next few hours. Next, let us look at our QQQ. And if we see the QQQ here, we have kind of moderated a little bit, and we have our first green candle after a long time. And if I look at the direction of our bullish channel, potential bullish channel, it is still very steep. It needs to be somewhere around the 45-degree mark, in my opinion. And I'm thinking that any further moderation is good. So we can take this green day for today. However, if you look at the MACD, it is tending towards a signal line ready to cross over to the bearish side, and momentum is just about average and flat. So I'm going to go and take a look at the one-day chart to see what is the action taking place out here. And if you look at the chart here, we can see that the MACD is bullish but tending towards a signal line, and momentum is above average but tending downwards. So it's a bit difficult to decide at this point of time, especially given the fact that oil has gone down. And if you look at VIX, VIX is also down. It's down to 0.54, and the MACD is bearish and tending towards the signal line. Momentum is absolutely below average on a daily scale. And if you look at an annual scale for the VIX, where each candle is a day, we can see that we are forming some kind of doji candle with a bias towards the bearish side. So I would think that probably we are on a razor's edge. Today is a make or break. And at this point of time, let us look at other indices also to see if we can get some kind of indication of what is happening out here. So if we look at the S&P 500, we are balanced on the 50-day exponential moving average. So the 50-day exponential moving average, if it gives way, which it could, because we have a MACD which is bullish but already turned into the bearish side, and momentum which is just about average. So today it's a very mixed signal overall. If I look at it with gold trying to go up, crypto being bearish, and VIX, which is the real-time VIX is showing a negative, and US oil is down. So with the S&P poised where it is, I would say the market could go either way today. If it went down, then it's going to be marking a departure into the bearish side. If it goes up and stays up, that would mean that we still have some amount of bullishness available for us to proceed further. At this point, perhaps I'm finding it difficult to be objective, because in my mind, I'm looking at third week of April, the time when I'm going to sell the shares, and I'm thinking that third week of April will be the perfect point of time where maximum gains that could have been done for April would have happened, and the risk reward ratio will start skewing towards risk beyond that point. And right now we are on the 7th of April, and if I look at the Russia-Ukraine conflict and the Shanghai lockdown, those two things don't seem comfortable, and also the midterm elections coming. All those are negative factors, and the Russia-Ukraine conflict is not in any way seeming to be coming to a conclusion. So with all those things put together, I'm thinking that there's going to be a lot of risk for the market to go down, and perhaps if I have any optimism, that will bring a bias into it. So I'm finding it very difficult today to make a call. So having said that, let's go and have a look at the genomics, and let's go purely by the technicals of each of those shares and try to predict price movement. So On the right side of the panel, we have the genomic shares, and I'm just sorting it so that we have all the winners on the top. And we can see that Teladoc is at the very top. So if we go and look at the chart of Teladoc, it is trying to break through above the bearish diagonal line as well as the 9-day exponential moving average. It has already surpassed the 20-day exponential moving average, which sits at 69.51. So there's a battle going on at that point with the 20-day exponential moving average. It's very strong headwinds for Teladoc. The MACD is bullish but tending towards the signal line, and the momentum is just about average. So Teladoc definitely has its challenges. If the overall market tone gets better, we'll still be in green. Otherwise, if this appears to be a dead cat bounce from yesterday's debacle, then maybe in the second half of the day, things will start turning red. Pfizer is done very well, 1.47%. It's converted this resistance into a support at 52.48, which is this horizontal line. It has got the support of all the exponential moving averages, and the MACD is turning bullish, and momentum is above average and pointed upwards. So Pfizer is likely to retain its positive gains today. Illumina is currently at 363.00, and it's battling a resistance at 363.33. It has got the support of all the 4 exponential moving averages, and the MACD is bullish but tending towards the signal line. Momentum is above average and pointing up. So Illumina is likely to end up positive today, in my opinion. If you look at Regeneron, it's up 1.25%, 1.35%, and it's a steep upward curve. It's a very strong bullish movement. MACD is tending to move away from the signal line in a bullish manner, and the RSI shows that it's overbought. So there's going to be a bit of a moderation. I think the gains for today may be capped at around $9 by the end of the day. IBB is up 1.00%, and IBB we selected basically because we wanted to make sure that we have some kind of an index for genomic stocks that can give us a second opinion. And that second opinion seems to be bullish. And if we look at the chart out here, it's very encouraging. MACD is bullish but tending towards the signal line. However, the momentum is above average and pointed upwards. And we have got the support of this diagonal green line, which is the earlier resistance that we had when we connected the lower highs of the previous trend. And therefore, I think the next resistance for us is going to be the 100-day exponential moving average, which is this white line out here. And it's currently standing at 136.73. Our current price is 133.69. So that's where we are going to aim for today. So IBB will end up positive today. And that means that most of our genomic shares are going to have a positive bias. That's what I would think. Next, let us look at Novartis. It's up 0.42%, a very, very strong upward movement. And we have got the next level of support from 90.63, which is this horizontal line out here, horizontal green line. And our resistance is at 91.29. The MACD is bullish and moving away from the signal line. However, the RSI says overbought. So I'm going to think that there is going to be some kind of a moderation. It's difficult to visualize us crossing 91.29 and staying above that for the day. We may cross, but we might probably come back down again because of RSI being overbought. Let me look at the one-day chart and see where we are. So if we look at the one-day chart, we are seeing that the MACD is bearish and moving away from the signal line, and momentum is dropping below average. So there is going to be a little bit of a moderation today. That means that Novartis is probably going to end up positive or flat at the end of the day. Go to Beam, 0.57 is the gain that Beam has had today, and it's got a resistance from this diagonal red line, which is what it's aiming for, along with a 9-day exponential moving average, which is the resistance. And our MACD is bearish, and momentum is below average. So Beam is likely to lose most of the positive that it has gained today, and probably end up negative or flat. ARGG is down. ARGG is up 0.38%, and it's got support from 44.39. MACD is bullish but tending towards the signal line. And if I was to look at the RSI, the momentum is below average and flat. So ARGG is likely to lose most of the gains that it has had so far. Vertex is up 0.33%. Again, we are highly overbought, and MACD is bullish and but tending towards the signal line. So I bet that if we go to the 1-day chart, we are going to see that the MACD is bullish but moving towards the signal line. And we are seeing that the RSI is above average and the momentum is pointing upwards. So there is still a bullish bias, but there's a move towards the signal line. So there is going to be a bit of moderation, especially because we are so overbought on a daily candle basis. And we still have a support from our diagonal line out here. So a bit of moderation is not a bad thing. So Vertex may end up the day either flat or negative. PACB is down 1.02%, and the MACD is negative. It's bearish and moving away from the signal line. Momentum is also below average and flat. PACB is likely to lose another 10 to 15 points before the end of the day. Intelia is down minus 0.15%, and it's just about managing to stay above this support line, which is at the bottom of the bearish channel. The MACD is bullish but tending towards the signal line. Momentum is also bearish. So I'm thinking that there's a very good chance that we may fall below this support line and convert that into a resistance. So there's a good chance that Intelia may today fall below 66.86. Right now we are at 67.22. Editas is down 1.47%. It has got support from the 50-day exponential moving average and the 20-day exponential moving average. However, the 9-day exponential moving average is now a resistance. MACD is bullish but tending towards the signal line. Momentum is also tending to go below average. So I think Editas is going to lose more today and probably end the day negative 45 cents. DNA is down 1.42%. And we have got MACD, which is bullish but tending towards the signal line, and momentum is going down. So DNA is likely to lose more today and probably end up the day negative 25 cents. Allogene is down 1.05%, minus 1.27%. And our resistance is at 9.93, as well as the 9-day exponential moving average, which stands at 9.49. And our current price is 9.36. If we look at the MACD, it is bullish but tending towards the signal line in a bearish manner, and momentum is average and falling down. So Allogene is likely to lose another 10 to 15 cents before the end of the day and probably end the day minus 40 cents or something in that order. Bluebird is down minus 1.81%, and it's got resistance from the 9-day and 20-day exponential moving average. MACD, though bullish, is tending towards the signal line, which is not a good thing. Momentum is below average and pointed down. So I'm thinking that on overall balance, Bluebird might probably lose another 25 to 30 cents before end of the day. Caribou Biosciences is down 1.03% with a resistance from the 9-day and 20-day exponential moving average. A bearish MACD moving away from the signal line and a flat momentum below average. Caribou Biosciences might probably end the day negative 30 to 35 cents. CRISPR Therapeutics is down 2.36%. I have removed the bullish support line which we had earlier that got converted into a resistance yesterday. So we seem to be consolidating in some sorts. But if I were to zoom out overall, I think we have still got a slightly bullish case going on out here. We'll have to wait and watch what's going to happen, because the MACD, even though it's bullish, is almost ready to cross over the signal line and become bearish. And our momentum, which was above average, is now trying to go below average and pointed downwards. So CRISPR Therapeutics might probably end the day with a negative of around $2.15. Verve is down 3.08%. MACD doesn't seem to be making any support out here. It's totally bearish and moving away from the signal line. Momentum is also bearish. So Verve is likely to lose another 20 to 30 cents before end of the day and potentially end the day closer to 90 cents down. IMTX is up 1.0%, and we still have support at 8.80. MACD, though bullish, is tending towards the signal line. There was some kind of a overbought signal out here, and it's kind of moderating. And one of our subscribers has come back with information that IMTX recently got FDA approval for one of its proteins. So that's the reason why it's probably moving sideways and consolidating. So there's a little bit of steam left in IMTX. So I'm thinking that IMTX is going to consolidate and stay above 8.80 support. That brings me to a conclusion of today's session. And as I mentioned, as I confessed before, I'm finding it very difficult to be objective here. I want the markets to move up so that my thesis of 15th April for selling my profitable shares comes to be true. So that's where my mind is dragging me, but I can't ignore all the negatives that are coming, and the way S&P 500 is also precariously poised, and the fact that gold was moving upward. So these are all contradictory signs, and with wicks down and gold going up, I don't know where the market is going today, honestly. I would tend to be more bearish just to compensate for my bullish desire. So I think overall the market is going to be down today on the second half. Probably the positives that we are seeing today is a dead cat bounce because of yesterday's fall. So that's about it, and I'll catch up with you again tomorrow. If you like the video, please put a like there. And if you're not subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.